Holy flippity flip flop flap and smokes, everyone. Cue the fire. Today was wild. Boy oh boy, did we not just have the craziest wild trading day since March of 2020 when the 40% stock market crash began. And what this is signaling is there's going to be much more turbulence ahead. So everyone, what caused this crazy sell-off and this crazy rebound, and is the worst over? Let's have a look. Okay, so first things first that caused this crazy sell-off was the European markets. We saw the DAX fell 3.8%, the FTSE down 2.6%, and the Stock 600, a list of 600 of the major European companies, fell 3.8%. This was triggered by tensions arising more and more at the Ukrainian border, and it's looking like a conflict is imminent. And if you just woke up this morning and looked at the indices, you probably wouldn't have noticed, but there was over a 4% sell-off in the S&P 500 today, and the Nasdaq fell over 6%. But of course, Papa Pow, he was like, "Plunge protection team, fire at will," because the S&P 500 officially went in correction territory, falling 11% from its all-time highs, and the Nasdaq was about to hit a bear market, falling nearly 20% from its all-time high. But you know what also happened today, everyone? Something historic happened today. Today, the S&P 500 tumbles its worst ever start through the first 16 trading days of the year. And as you can see here, the S&P 500 entered into correction territory. And why this is so huge is because normally January is a good time for stocks. People may have sold off stocks for tax loss harvesting in December, and then they come in and buy up the dip in January. So it's normally quite a good month. But again, this was the worst first 16 trading days in a year on record. And what do we have tomorrow, everyone? The Federal Reserve's meeting. And what I think the markets are doing, they're playing chicken with the Fed. They're saying, look, you're going to take our money printer away. You're going to take our quantitative easing away. You're going to take our loose monetary policy away. Okay, you do that. We'll crash the markets.
Dump it.
So it's going to be very interesting to see what Jerome Powell says after his two-day meeting and his press conference with the media, because I'm sure the media is going to bombard him. So let's see if he stays the course or if he buckles under the pressure now that the markets are falling. But as we can see here, everyone, gold is actually up on the day, up 0.64%. And that's why I always say you want to have a bit of gold in your portfolio. Again, not telling you to sell all your stocks and go all in gold, but you do want to have a little bit of gold in your portfolio as insurance. And Bitcoin also plunged below 33,000, a key level. But we saw as the stock market rebounded, Bitcoin did as well, and other cryptocurrencies. So it shows that Bitcoin and other cryptocurrencies are very correlated with what the stock market does. So for all my crypto investors, you have to pay attention to what's happening in the stock market and also the macroeconomic picture as well. And definitely don't listen to Jim Cramer. Look at his flip-flopping, everyone. Listen to this. On January 20th, Jim Cramer says the stock market is getting closer to forming a bottom. Now let's look what he said the very next day. Charts suggest the S&P 500 may continue to struggle through early February, Jim Cramer says. People, stop listening to this guy. He literally just looks at the candles, and if it's a red candle, he says, sell, sell, sell. And as soon as it goes green, he says, buy, buy, buy. I told you all along. But the question everyone wants to know is the worst over, and is it going to get better? Well, we've had a very famous investor come out and call out the crazy speculation, and he's saying that this next crash could rival the dot-com crash or even rival the 1929 Great Depression crash. Look at this, everyone. Jeremy Grantham doubles down on crash call, says a sell-off has just started. His prediction is the markets will fall almost 50%, and he says if you want to hedge against this, go into value stocks, cash, and commodities and gold. Now let me give you my thoughts on this. Now value stocks will perform better than high growth stocks in this period, but if the stock market crashes, value stocks are going to crash as well. He says you should get into cash, commodities, and gold. Now commodities are very speculative and very volatile, so they are quite dangerous to get into as well. But what I do agree with him, it is a good idea to maybe start building up some cash reserves on the side to, again, like I've been saying all along, don't buy these baby 1 or 2% dips. The real dip is coming, at least a 20% dip in the indexes. That's the time when you may want to start dollar cost averaging in. And in regards to gold, what have we seen, everyone, over the past 3 weeks? Stocks have been getting absolutely hammered, but gold has held up strong as a safe haven. And the good thing with gold, unlike cash, is it's also a hedge against inflation and a store of value. But going back to his prediction, the markets are going to crash at least 50%, he says, with almost certainty. I wasn't quite as certain about this bubble a year ago as I had been about the tech bubble of 2000, or I had been in Japan, or I had been in the housing bubble of 2007. I felt highly likely, but perhaps not nearly certain. Today, I feel it is just about nearly a certainty. And he goes on to talk about the crazy speculation that we saw in 2021 with the meme stocks, with NFTs, with cryptocurrencies, and crazy valuations for profitless companies. He said this hit every one of his checklists for a super bubble. And he also said with inflation so high, the Federal Reserve won't be there to come and bail out the markets. And I think this is what the markets are finally starting to realize, because in 2021, every time we had a big sell-off, there was a big rebound the next day. But what we're seeing is continued selling pressure day after day. So what I think is it's almost a certainty that we're going to be heading into a bear market in the S&P 500 and across the broader major indexes. The key question is, and it's still too early to tell, is whether this will lead to a full-on 50% market crash, or if the Federal Reserve is going to flip and start bailing out the markets again. But we'll get our first sign on this in a couple of days after its Federal Reserve meeting. So everyone, that was a quick recap of what happened today in the markets. What do you think about all this action? How low will it go? You let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.